Hey everyone, and welcome to this deep dive. Today we're looking into SoFi Technologies, the company behind the stock ticker symbol SOFI.
Right.
And we've got this listener who is really curious about SoFi's stock price. It seems like a real puzzle because the company appears to be performing well, but the stock isn't really reflecting that success. We've got this video analysis that we're going to use to help us figure out what's going on.
Yeah, it's definitely interesting to see such a disconnect. The source we're looking at points out a lot of positive things about SoFi's performance lately. The kind of stuff that would normally push a stock price up.
For sure, they're talking about a 26% increase in revenue compared to last year. That's pretty impressive, right?
Absolutely. And it's not just a one-time thing either. They've been consistently beating what analysts expected for their earnings. Sometimes they're even blowing those expectations out of the water.
So it seems like it's more than just a temporary boost.
Exactly. It's not just about numbers on a spreadsheet. They've been adding tons of new customers and expanding the types of financial products they offer. They set a record for new members and products just in the last quarter of 2024. That kind of growth usually gets investors excited.
Yeah, it makes you think they're building something pretty substantial. Plus, their CEO, Anthony Noto, is super active on social media. The source mentions he's all over the platform X, and they see that as a good sign, transparency and engagement.
Yeah, that visibility can definitely help build confidence, but you have to remember the stock market isn't just about what's happening right now. Investors are always looking ahead and trying to predict the future, and sometimes what they see makes them a little nervous.
So what is it that investors are seeing with SoFi that might be making them hesitate? The source mentions this negative liquidity ratio. To be honest, that sounds kind of scary. Can you explain what that means in simple terms?
Sure. Think of it this way. Imagine SoFi is like a student who's working a part-time job. They've also got student loans. They're earning money, which is great. But right now, their loan payments are actually higher than what they have in savings. That's basically what a negative liquidity ratio means. They have less cash on hand than they have in total debt.
Oh, okay. That makes a lot more sense. So it's not like they're drowning in debt, but it's something to watch.
Exactly. For a company like SoFi that's putting a lot of money into growth, it's not necessarily a huge red flag, but it does raise questions about how stable their finances are in the short term. Investors who prefer less risky investments might be hesitant to jump in until that ratio improves.
Makes sense. The source also talks about SoFi's free cash flow as something that could be a concern. What's so important about free cash flow, and why would investors be worried about it?
Well, free cash flow is the money a company has left over after they've paid all their essential expenses. It's kind of like your disposable income, the cash you have to spend, save, or invest after you've paid your bills. SoFi's free cash flow has been kind of up and down, and the projections suggest it might actually shrink in the next few years.
So if the free cash flow gets smaller, does that mean they'll have less money to invest in new products or to expand their business?
That's the worry. Investors like to see companies with strong and growing free cash flow because it shows they're financially healthy and that they have the resources to keep growing. When that free cash flow is all over the place or shrinking, it creates uncertainty and investors get nervous.
I get it. It's like if you have a leaky faucet in your kitchen, you might be able to manage it for a while, but if it gets worse, you're going to have to call a plumber. And that could cost a lot of money.
Yeah, that's a great way to put it. And with SoFi, investors are watching that free cash flow faucet very closely.
So we've got these concerns about liquidity and free cash flow. But the source also gets pretty technical and looks at some stock charts. They even look at a 15-minute chart, which seems a little extreme. What can we really learn from these charts?
Charts can be helpful for spotting trends and patterns and how a stock's price is moving, but they don't give you the whole picture. It's like trying to understand everything about someone's life just by looking at their Instagram. You might get some clues, but you're missing a lot of context.
Right, so it's just one piece of the puzzle, not the whole picture. The source compares SoFi's chart pattern to what happened with AMD, which saw a pretty big decline. Are they saying SoFi's heading for the same fate?
It's an interesting comparison for sure, but every company is different. AMD and SoFi are in completely different industries and they face different challenges. Just because their chart patterns look kind of similar doesn't mean they're going to have the same outcome. It's like saying just because two birds both have feathers means they must fly the same way.
Okay, so we can't just assume SoFi's going to crash just because their chart looks a bit like AMD's. But then the source mentions this complacency era. What does that even mean, and how does it apply to SoFi? Yeah, it's like SoFi is doing all the right things, but the market's just not that impressed. It's like they're saying, yeah, that's great, but show me more.
Right, and it's this weird mix of strong performance and then this hesitation from investors, this complacency era, like the source called it. It suggests that sometimes good news and solid results just aren't enough to get a stock moving.
It's like the market's taking a breather, waiting to see if SoFi can keep this up.
Exactly. Investors might be waiting for more proof, or maybe they're getting a little cautious after seeing such fast growth. It's like they've had a big dessert and now they're waiting for the main course.
So maybe they're not doubting SoFi's potential, they're just not fully convinced yet. Which makes me think about those intrinsic value calculations the source did. They came up with this huge range of potential buy prices from like $24 all the way up to $133. That's a crazy difference. How can the estimates be so far apart?
Well, intrinsic value is basically trying to figure out what a company is really worth, like what's its true value beyond whatever the stock market is doing. It's like when you're trying to figure out the real value of a house, you don't just look at the asking price. You consider things like the location, the size, and if the roof leaks.
Yeah, you gotta look deeper.
Right. And different analysts might use different methods and assumptions when they're calculating intrinsic value. That's why you often see a range of estimates instead of just one precise number.
So it's not an exact science. It's more like an educated guess about the future.
Exactly. But even with those different scenarios, the source came up with even the more conservative calculations suggested that SoFi might be undervalued at its current price around 14.91 cents.
Wow. So even if we're cautious, it still seems like SoFi could be trading for less than it's actually worth.
That's the main point here. Different valuation methods with different levels of optimism all suggest that SoFi might be a good deal right now. Of course, intrinsic value isn't the only thing that matters, and those projections about the future might not come true, but it's definitely something for investors to think about when they're making decisions.
It's like we're trying to solve a mystery. We've got these clues, strong performance hesitation from the market, and these interesting valuations, and we're putting them all together to try and figure out if SoFi is a hidden gem or a risky bet.
And the source definitely seems to think it's a gem. They call it a brilliant stock, and they encourage holding on to it or even buying more at the current price.
They're definitely optimistic about SoFi, but it's worth noting that they admit to owning the stock themselves. So it makes sense that they're enthusiastic. But we also have to remember that everyone has their own biases.
Oh, for sure. It's always important to think about where information is coming from and what the person's motivations might be. It's like if a friend who works for a car company gives you advice about buying a car, you appreciate their expertise, but you also know they want you to buy their brand.
So taking all of this into account, the strong performance, the market's hesitation, the potential undervaluation, and the source's own perspective, what's your overall take on SoFi? Is it a buy, a hold, or a sell?
Well, I can't give financial advice, but I can help you connect the dots and see the bigger picture. What's really interesting about SoFi is that they're at this crucial point. They have amazing momentum and a really compelling growth story, but they've also got some real challenges to deal with, like that negative liquidity ratio and the possibility that their free cash flow could shrink.
It's like they're at the starting line of a race. They've got a powerful engine and a great driver, but the track ahead is full of twists and turns, and there might be some obstacles along the way.
Exactly. And the market seems to be recognizing both the potential and the risks. That's why we're seeing this disconnect between how well SoFi is doing and how the stock is performing. Investors are weighing the evidence, trying to decide if they should bet on SoFi to overcome those challenges and win the race.
So for someone who's thinking about investing in SoFi, it means they need to carefully consider the risks and the potential rewards. The source's enthusiasm is catchy, but it's crucial to do your own research and make sure SoFi fits with your own investment goals and how much risk you're comfortable with.
That's really important. This deep dive has given you a ton of information and different perspectives, but it's really just the beginning. It's like we've given you the map and the compass, but you still have to navigate the terrain yourself. Spend some time digging deeper into SoFi's business model. Look at their competition and think about their long-term strategy. Read analyst reports and look at their financial statements. Ask yourself if you're okay with the level of risk involved.
It's all about making smart decisions, and that starts with asking the right questions and getting different viewpoints. Now, before we wrap up this deep dive, the source left us with a really interesting question to think about. Remember that complacency era we were talking about? Well, they suggest that it might be followed by anxiety denial and even panic.
Yeah, the emotional side of investing can be just as powerful as the rational side. Sometimes the market reacts to things in ways that don't seem to make sense, driven by fear and uncertainty more than facts and logic.
That's kind of scary, but it also makes you wonder if this complacency era does lead to more chaotic times, could that actually be a good opportunity for people who believe in SoFi's long-term potential? Yeah, it's almost like we've been detective trying to crack the case of SoFi. We've seen all this impressive growth, but we've also uncovered these concerns, and we even talked about how emotions can influence the market.
And even after all that, the question of whether SoFi is a good investment still doesn't have an easy answer.
Right, there's no way to know for sure what's going to happen in the future.
Exactly. Investing always comes with some level of risk, but that's also what makes it so exciting. You have to weigh the evidence and think about the risks, and then make a decision based on your own situation and your investment goals.
So if someone's listening to this and they're still not sure about SoFi, what's the best advice you can give them?
I would say trust your instincts, but do your research too. Don't just get caught up in the hype or let fear control your decisions. Look closely at SoFi's financials, read reports from analysts who aren't connected to the company, and compare SoFi to other companies in the fintech industry.
It's like going on a date. You might be really attracted to someone at first, but you still want to get to know them better before you decide if you want a serious relationship.
That's a great way to put it. Investing is a long-term game. You want to feel good about your choices and make sure they fit into your overall financial plan.
So as we wrap up this deep dive into SoFi, what's the one big takeaway you want our listener to remember?
I think the most important thing is that knowledge is power, and making informed decisions is always the best approach. We've covered a lot of ground here, but the real goal is to help you feel confident about continuing to learn and explore on your own.
Absolutely. And that's what this show is all about, giving you the information and the tools you need to make smart investment decisions. Thanks for joining us on this journey into the world of SoFi Technologies.